Recording. All right. Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:27 p.m. Eastern Standard Time on a cold waterfront weather here in the New York City, New Jersey area. This is a free webinar, very important one in my opinion, given everything that's going on. The session will be, it's 8:28 p.m. on April 9th. April 9th, okay. Time flies. This session will be recorded, uploaded to the Clueless Trading YouTube channel. My only marketing plug is that anybody that you know out there who's somewhat dabbling in the market or investing or wants to understand what U.S. financial markets do, what global markets do, highly suggest that you pass the word around. Let them go to the Clueless Trading channel, listen to the videos, and maybe they'll join us at the Clueless Trading Club. Whichever the case, it's a very powerful educational channel that I have on Clueless on YouTube, and I think it's anyone who has any interest in understanding investing and trading and financial markets should visit there. Okay. Full disclosure, this is purely for financial education, not for any solicitation or advice. And we shall begin. So let me just start off with a couple of quick broad points. We are in extremely strange times, okay? The market's always strange. Even when the markets are going up, 100 points every single day, as was the case in January, and also in parts of February, but especially between December 29th, end of the year, January, was just like a one-way ratcheting up. Or if the markets are falling, it's always, it's always a strange time. Let's just face facts. The difference now in before is the fact that volatility is very highly enhanced. That simple English says the markets are extremely volatile. People out there, in the media or when you read the papers, say, oh, the markets are crazy. Even Bogle, who's 90 years old now, the billionaire founder of Vanguard Mutual Funds, great gentleman. Like he said, he doesn't understand the markets. He's never seen anything like this. My point is rather in a simplistic fashion, that if you focus on the gyrations in the market and just the prices, you're not going to understand anything. And that's what I keep on preaching every single day, every single hour on my service. But if you track the charts of what's going on, the volatility can be somewhat handled, contained, and you can trade in between that. You have to be a market agnostic. You don't need to be a bull. You don't need to be a bear. You just need to be a trader or an investor at the most opportune times. So I have come to the realization, and I had come to the realization years ago, but now more so, that sitting here trying to prognosticate and that we are in a severe bull market, and this is it's gonna hit that point, and from that point it's gonna keep on going higher. All that doesn't matter. We're in a highly volatile environment where we drop 1,000 points, we go up 500 points, we drop 700 points, we go up 400 points, give back all of it during the day, and that's the nature of the beast. At some point, it will calm down. And what you see behind you, not the first time, you guys see this all day long, because that's what I do to help all of you, is to show this on a real-time basis so that you can trade in between this the vacillations, or what they call in the media choppiness, because they can't figure out what the heck's going on. We know what's going on. We embrace volatility. So the point is that either you embrace the volatile nature of the markets and make some make some money on the long and short side using Clueless Trading tactical charts, or you're living in la la land. I'd like to live in reality. And the more you handle this type of volatility and make a few coins, with some dollars out of it, the more confidence you get as a trader. And that's a fact. This is hand-to-hand combat. There's bullets flying all over our head. Look what happened today. Not the first time. We were up how much? Like almost like 400 points. I called it like a robot, told you when I saw the first candle form, I didn't know we are going to go all the way down. But then I started to see the second candle form, put that short out on the SPYs, told people to get out of any large tactical profits that they had. And I'm sure some members had some very decent profits, even if they bought early during the day, before things really started shooting up. It was time to get in, even if they didn't buy on my alerts on Friday, in which case they made out like bandits. But that's just the nature of the beast, guys. Okay? So either you embrace volatility, either you trade the markets based on tactical charts. The swings are wide. So small amounts of money can get a very decent amount of return. Whether it be 60%, whether it be 70%, because that's really what we go for when we trade options, right? Whether it be 100%, whether it be 200%, you have to accept the fact you cannot live in a bunker thinking that there is going to be a time where you'll just buy and it's never going to go down from there. It's not going to happen like that. How about I say it's not going to happen like that for a long time, ever. Volatility is here to stay. The machines have completely taken over. You can see that in the form of this chart, which you look at every day, and I walk people through it every day. This is not grandpa's market. Just a way of saying, not that we don't love grandpa. This is not the old-fashioned market. This is a market, as you can clearly see. Okay? Run. It looks like an EKG cardiogram, whatever they call it, right? This is a market run by black box algorithmic high frequency trading programs. I've been saying that for years. You hear that a lot these days on the media, whether it be CNBC, Bloomberg, Fox Financial News, whatever the case may be. They are finally waking up to the fact, I don't know where they were all these years, that the machines control the market. Even here, seasoned guys, reporters from the New York Stock Exchange saying, oh, we think it's these algos which do these things nowadays, Like, it just makes me laugh. It shouldn't make you guys laugh. You guys should be like, we know this stuff. Because Clueless Trading has been talking about this for ages. So now is the time of acceptance. Accept and prosper from within that. Not that every trade's going to be, they're fast. These machines are fast. They throw curveballs, and I even though I'm trading my charts, it's still not easy. But you have a sense of what's going on. And then as we zoom out and look at the daily picture, then which we're going to look at tonight, as always, and we see these inverted hammers below the 150-day moving average, heading towards the 200-day moving average again. Oh, yeah, it's going to test the 200-day moving average again. Almost a given. Then we start to see the picture of what's going on. The picture is not a smooth picture. The picture is driven by volatility for a specific number of reasons. Let's talk about the economic, as I flip through the charts quickly. Let's talk about, this chart should be in the Museum of Modern Art. How about it should be on the walls of the New York Stock Exchange? The flash crashes, the reflex bounces, the minor pullbacks, then the heavy algo short squeeze programs which drive the market up 400-500 points, another flash crash, very choppy trading range, break out of that trading range, hit the upper end, the left shoulder, move just like clockwork, hits it. Look, I don't draw these charts after the fact. You guys know that, right? These charts are drawn before the event happens. I can't deliver anymore. I mean, this is some of the finest pieces of tactical artwork that you guys can use. Focus on it, understand. It's not that hard, trust me. What's hard is placing the trades, getting out of it, because these things are happening within a span of maybe a couple of minutes sometimes. The turnarounds I'm talking about, the inflection points from the low points moving higher. But there's ample time to get into those as they're moving, because something doesn't go from being up 20 points to being up. I mean, the Dow Jones doesn't go from being up 10 points to being up 440 points in 2 minutes. You have ample time to react to it. Some people say, "Oh, I'm really busy," and stuff. Well, I can't control that stuff. You can be that busy that you don't get, we live with technology. I looked at my iPhone the other day and I said, my God, we're blessed. We live in a world where this iPhone, I don't talk about Samsung, right? Like that's Samsung. Dump your Samsung, buy an iPhone. So bottom line is, we live in a world of technology where this unbelievable piece of machinery, a moving 8-inch screen, whatever, 8 plus iPhone, you can live your life on it. You can trade on it. You get tweets on it on an instantaneous basis. My alerts. So there's absolutely no excuse. You don't need to be glued to the screen. Yes, when you have multiple screens, I do this on a professional basis. I have no choice. This is my living. I love what I do. I work very hard at what I do. And I know when you have bigger screens, you see a lot more stuff. But I'm doing the hard work of putting this through, as I always say. Your job is to basically understand it. That's why we do these free webinars. And then act on it. You don't have to trade every 5 minutes. But you see a big fat candle starting to develop after the third candle. And I'm saying go short the SPYs at $1 or $2. Before you know it, in an hour or so, as the fallout starts going on. And I even give reasons why I'm thinking that's happening. And I put down a couple of reasons. And then at 4 p.m. comes the raid, the FBI raid on Michael Cohen's office at the Trump Tower, President Trump's personal lawyer. But that's not the reason why the markets fell. The market started falling because it hit a certain specific level, almost got close to this very powerful 2660 level or so on the E-minis. But right before that, it started to turn. Then the CBO, the Congressional Budget Office, comes out with a couple of statements. The first statement was very bullish, that U.S. growth is going to pick up from 2 to 3%. And then right after that, they mentioned, well, that's going to create a massive, which we already know, which is a very serious issue, which is a risk to the U.S. economy. The fact that our overall debt deficit will eclipse another $2 trillion. And by 2020, that's only like, 2020 is like around the corner, especially when you look at massive balance sheets. And that's going to cause some, serious risk to the U.S. economy. So that's when the market started falling. And I even put that out. So so looking at what you guys need to do, because that's my job to try to help as much as possible, is I don't control the markets. I'm just a very fast messenger of the markets in many cases. In almost a lot of cases, I will give you signals prior to it happening. Your job is to act on it. How you act on it, whether you're sitting somewhere having a beer, or whether you're lying in the bathtub, or whatever you're doing, you can react to it. I just got a text from one of my guys who's a very busy professional in the technology world. And he said, just on your alerts, I sold a whole bunch of my profits on all the big stuff. And there were big profits to be made, right? today on multiple alerts, whether it be Facebook, whether it be Google, whether it be Netflix, whether it be Apple, all these alerted last week. I said, take it down, take it down. I'm not going to ever tell somebody sell everything. That's not my job. And these markets are not like sell everything type of markets, but take down large positions. You want to sell everything, go ahead and do it. The visual representations of what I'm showing you, you guys are smart people. God has given us eyes, some brains. I still have 3 brain cells left, as I like to say. God's given you hands, limbs that you can move. Things. Be grateful. Use them. You have a bunch of contracts on on Google, which are up 110%. God damn it, sell it. I'm not gonna, I can't and I won't walk somebody through their own trading book. That's crazy. First, I don't get paid enough. Second, I'm not liable for that. And secondly, it's not, it's not my job. It's your job to manage your profits. So anyway, these are such like blatantly obvious things that I'm saying. It's almost laughable. So this is the face of volatility. To me, I see a structure. I have structured the chart so you all can see a structure. All the levels are posted. These color-coded columns, flash crashes in kind of a lightish red, trying to be kind of fashionable, right? Not like deep red. How about I put deep red? Let's see here how it looks. Whoa! Yeah, maybe I should. But, I want to scare the living daylights out of members who are already scared out of their minds about what's going on. I don't get scared anymore because I expect the worst. When you expect the worst, you do your best because you already know what the worst can be. As my beloved father, who passed away many years ago, used to say, and I mentioned it before, you got to accept the fact that life is hard. And once you accept that fact, then everything becomes a little bit easier. As I'd like to say, we're not trust fund babies here with $1 billion in the bank. We ain't the Trumps. We ain't the Saudi royals. We're not the Rockefellers and whoever they're out there, okay? We're working hard for our money. We're paying our bills. We got to pay our debts, all kinds of stuff. Normal people. Normal people. So, couple of broad points. Risks to the market, okay? This chart, like I said, and I didn't mean it in a facetious way or in a demeaning way, even a child could trade this chart. Honestly, look how clear it is. I was actually very impressed with my skills to create this. This was created today, this morning. How every line hit every single level. And look at, first it started off with a triangle. 2 triangles, one here, one there. And, it can't get any easier than this to understand what's going on. How you react to it, that's your job. Every level is put in place. So, risk to the market right now. We have one of the most critical speeches from Premier Xi, who is a hardcore diplomat. He's not brash. He is the Chinese premier. Measured man. He has great relationship with President Trump. Personal relationship. He does. He's not into making any type of brash comments that our good old Donald, like me, like to do. Piss people off sometime, right? We kind of like in the face kind of New Yorkers, right? But that's just us. So, Xi speech is tonight. I don't know what time, hour tonight, their morning in Beijing Economic Forum, and let's see what he says. I have my opinions about what he's going to say. I think it's not going to be any radically different, but it's not about what he says. It's the layers of understanding of what he says. So when I get it, I'll put my 2 cents in and we'll go from there. So that's number one. And that is a risk. And regardless of China's misdoings, and we're not angels, by the way, okay? We're not angels either. We have I'm a straight up guys, I'll tell you. We have strong armed many nations around the world for our benefit. That's what nations do. And we're a superpower. We have the right to do it. Unfortunately, many people think, like, no, we're the fairest nation. We're not when it comes to trade. And China and a lot of third world developing countries have taken full advantage of us because it's to their benefit. And it's benefited us big time. Try making everything in the US. Good luck. We'd have inflation up the galore, prices up almost 60%. And if you think that hasn't benefited us as a nation, then you're living in some weird world I don't know about. Has it cost US workers a penny? Yes. But I'm not going to get into that debate right now. World has changed and is continuously going to change. So either you adapt or you perish. That's just the way it works. But there are some very serious points within the complaints against China, which I totally agree with. But it has to be handled correctly. It cannot turn into a schoolyard brawl. It cannot get personal. And our corporate leaders who have built this nation, you as business leaders are the true leaders of America, not our political leaders. I don't care who they are. It's the you as business leaders who have created this great nation that we live in. And that's a fact, whether you like it or not. Call it whatever you want. Okay? So they don't like many aspects of what's going on. But you have to respect it. And I believe that the underlying talks going in Washington, from with the Trump team and powerful U.S. Business leaders, whether they be from Boeing, whether they be from United Technology, whether they be from Caterpillar, whether they be from the big technology companies, they're talking. And a solution will be found. Not going to make anyone happy. Doesn't matter. But at least it'll be a compromise. That's what we do. So that's number one. So that's a major risk as well as a reward. That's why I put it's a risk reward part there. If you think it's a one-way street down another 3,000 points from here, well, it's not going to be like that. And you know it's not going to be like that because you can clearly see it in the charts. We down 1,300 points, we go up 700, we go down 500, we kind of stay kind of flat in the middle, another 300 the next day, another 600, 1,100 points here. And I hope some of you are really taking advantage of these things that's going on. Another 700 points here. Goes up another 400. And this is how we end up today. It's not the end of the world. And if somebody knows by now, knows how to read some of my charts, and many of my ACS students certainly do, and many of you who are like, I'm not going to pay him that little few bucks as if that's going to make me rich and pay off my debts and everything, right? It's 200 some bucks for a 5-session course, which I highly recommend every member take. Not to enrich me. If I want to enrich myself, I'd charge $1,000 for the course. You go to Online Trading Academy and all these places. I'm not going to mention too many names because then they'll be sending me cease and desist letters and all that garbage. They charge you thousands of dollars for teaching you nothing. The realities of what goes on. They'll teach you about a moving average. Oh, whoopee, that's exciting. And I'm teaching you the realities of hardcore hedge fund type of trading, which many of you have getting to master. So the point is that you can clearly see here that if you think it's going to be a one-way straight up and one-way straight down, it's not going to be like that. But there's opportunities. And this levels here probably come down a little bit more, maybe not. Futures are barely down a buck right now. Xi's speech is going to be a diplomatic speech. I don't believe, will start a full-scale, out of the control kind of tweet storm that Donald likes to do once in a while, which I think is completely unproductive and idiotic, if you ask me. I don't care, what anyone thinks what I say, because I really don't care. Some of the most idiotic things that are said at 7 in the morning, 6 in the morning, while he's showering, shaving, sitting on the toilet. I don't know what he's doing. It's so idiotic. It's just like, stop it. Grow up a little bit. Now, behind that, in my opinion, is a strategy. So that's fine with me. But it needs to be curtailed a little bit. So that's one. Second thing is about this budget deficit stuff. This is serious stuff. Now, these are long-term stuff. We talked about deficits during Reagan's time. The U.S. market still went a lot higher after that, and our deficits ballooned, but we kept on servicing it. A deficit is like a debt, a credit card debt. If you're earning enough, you're going to pay it off every month. As minimum payments, add on a little bit more. So the credit card company knows you are a good credit customer. Same thing with nation's deficits. There's nothing wrong with budget deficits unless they go completely out of control. And secondly, there's nothing wrong with trade deficits either. They say, oh, trade deficits are really bad. What is a trade deficit? That means you are buying more stuff. And if you like something, you don't care where it's from, you buy it. You like it, you go buy it more. Whether it's made in China or Bangladesh or Vietnam or Cambodia or Japan or North Korea. I mean, not North Korea. South Korea, Germany, Switzerland, the higher end products, you buy it. The problem that Trump is forcefully going on, which I agree with a bunch of stuff, is that there are issues with opening markets. And I think that's Premier Xi is what he's going to be talking about tonight. Open your market so we can sell. If the Chinese consumer likes our products more than your products, he or she has a choice to buy it. That's what we want. Intellectual patent protection, so you don't say, oh, you have to give us your technology patent before you sell into our country. That type of stuff is protectionist, and that's wrong. It's completely wrong. But deficits, who cares? So that's just there's a lot of meaning to it. Okay, you don't have to be like crazy nationalistic all the time, which I very much am. I'm made in USA. I won't even ask how many of you guys use Samsung phones. Why the heck do you use Samsung phones? iPhones are 100 times better. So you yourself are creating the problem by using a foreign-made phone, Samsung as I like to call it. Why? Is it a better phone than an iPhone? No, it's not. Some people would say, oh, yes, it is. I don't think so. So why, so before you start going, waving that flag and screaming and shouting, make America great, dump your Samsung phone. Make America great. Buy an iPhone. That's serious. Now, with cars and stuff, we give them full access to sell their cars here. With the biggest selling cars in America, what? What's the biggest selling car in the U.S.? Somebody tell me, please. What is the largest selling car in the U.S.? Highest selling car. Number one for quality and sales. Come on, guys. Take a guess. No, it's not. Exita said Ford. Yes, Mike is right. Toyota. Toyota, Honda, Kia. Hyundai. Not Ford. Ford for trucks. We are getting better. We are making better and better cars. In the last 20 years, we've made a heck of a lot better cars. We used to make really crap. We used to make the best cars because we invented cars. Henry Ford did. And then we kind of went downhill. And then we started coming up. Yes, these Japanese cars and the Korean cars, they're really reliable. They're cost effective. It's helped middle, lower income Americans have 4 wheels to drive. So question is, we give them full access. So they just should give us full access to sell our cars there. And they'll love it. American cars are very well liked in certain parts of the world. But the Japanese have a monopoly on it because they do make very reliable cars. And so do the Koreans. Everyone used to laugh at the Hyundai, and look at the Hyundai. They even make I think a model called the Genesis, which looks like a friggin' BMW 750 IL. Beautiful car. So that's all different stuff. Anyway, I don't want to ramble on. So we have the deficit, the budget deficit risk. We have we basically at this point have a we have interest rate risk, just in case the Fed decides to really ratchet up. This is Facebook, obviously. I'm just kind of flipping through charts. You don't have to look at the same screen. There's your Tesla. Hold it like a frigging robot. I know some of you just minted on this trade. Told you it was going to go here. Went there. Told you it was going to get pulled back. It's going to pull back. It's going to pull back right here to the upper end of the gap. And we're going to see how it reacts here. And that should be a good buying point. You can see that right here. Stochastic is nicely sold off. All mechanical. All run by robots. Anyway, so we have interest rate risk. We have the China. This trade war risk is the biggest thing. We don't have a trade war. We have a trade skirmish. We have a trade quarrel. We have a trade kind of like, shouting match. And I think it's going to get resolved because both our nations, they need us a lot because we're the biggest shopping mall. I mean, we're like the biggest shoppers in the world. 80%, 70% of our GDP is run by consumers. No country, nation has ever done that. Try not buying something for a couple of days. The U.S. economy will go into a recession. If more people like me who don't really shop that much at all, the U.S. would be in a recession right now. But thank God for the rest of the United States, who like to just spend everything. God bless the United States, the economy stays afloat. So we have the interest rate risk. We have the trade that's the biggest risk right now. The trade tariff stuff. We have risk in earnings. I know you hear a lot in the media. Oh, it's going to be great earnings. The U.S. corporations are going to deliver 20%, top line growth and this and that. I don't believe anything. I think U.S. companies are in great shape, but I think a lot of it is, it's already built in. So what I like about the fact is we're going to go very selective, as I've been doing. We go very selective on individual stocks during earnings. And we try to put a straddle together so you kind of protect it if you're doing the earnings trade before and after the numbers come out. Because I think what's going to happen, it's a pure stock market right now. Not everything goes up at the same time. Not everything falls at the same time. In fact, today, before we started pulling back, was one day that I saw the biotechs, the techs, the small caps, the Chinese stocks, all flying up together, which was very, very bullish. But comes the volatility beast, right? But even now, when I look at my other screens, I see a lot of green. Yes, they pulled back, a lot of green though. So that's a good sign that all sectors participated. Energy, small caps, China plays, US FANGs and major tech companies, biotechs for sure. I have a basket of these biotech stocks that are going to get bought out. This is the second one that got bought out. AVXS had very little on it because it's a little, wish I had a lot more. Boom, it went. Stock was up $95. Options went up a lot, but just had little bits. So have a little bit of each. I can't seem to convince anybody to do that. No one cares. They didn't care when Juno got bought out. That was a huge win. Juno Therapeutics. Blue is going to get bought out at some point. AGIO, Sage Therapeutics, Sarepta, Clovis, Puma Biotech possibly, EDIT, Editas, CRISPR. These are all gene therapy companies, just the way AVXS is a gene therapy company. So I have this basket. So if you guys don't want to take advantage of it, well, good luck. What can I do? I'm doing my job. They're going to, one after another, they get bought out. So what am I going to say? Oh, it's going to get bought out at 7 p.m. The news is going to come out 3 weeks from now. I can assure you there'll be a significant amount of members who still won't buy. I used to really try really hard. I just give my hands up and said, hallelujah, just do what you guys need to do. All right? We had a bunch of members, not a bunch, a few members who quit. God bless them. I basically sent my response to them, God bless you all. Because this is the type of market, because of the intense volatility, that's literally going to throw out, I would say, a majority. I'm not talking about Clueless trading overall. I'm talking in general. Mark my words when I tell you this. A majority of retail traders are going to get not just blown out, they'll just like, no, we can do this. We'll wait for a better time. There is never going to be a better time. The best times come and go. The best times was today from Friday's buys. And very few took advantage of it. So there is not going to be a best time. There is not going to be a time when everything's going to be like la, 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 boom, boom, boom. Because even when there was the best times, when we think about markets going up every single day, okay, like here, for example, in February, massive move. Even then, very few made any real money. And like I like to say, which not like to say, which is unfortunately a very unpleasant fact, is if you can make money on tactical shorts, big time longs, what can you make money on? When it's going higher, it's like, oh, I missed it. It's gone a lot more. And if it's a short going lower, oh, I missed it. I can't short this anymore. No, no, no. And they see another big candle. That's another like 200% on the spike puts or SPX puts. No, no, no. I can't do that. It's way too low right now. So cut that crap out, guys. Okay? Try to really focus on the charts. It's not that hard. And you don't even have to like look at like some complicated charts. I try to make it, my goal has been lately to make it as simple as possible. As simple as possible. So I drew a simple chart. This is, this is not a complicated chart either, but okay, it's got a lot of lines, levels, and stuff that an active trader can trade on because we have all types of traders. We have traders who are active, traders who are swing traders, traders who basically look at it and say, okay, I'll buy it and hold it. So my job is to cater to everybody. So I'm doing my job. So I drew this chart. Can't get any cleaner than this. Stop, big move, even if you missed it. You could buy here, you could buy here. Then it almost got there, and then I started to see the first candle, alerted everybody that, I basically, as it's approaching this major line, this one, you can clearly see that. That's a major sell zone, supply point, whatever you call it, with a big fat red arrow. Okay? So as it's getting closer, you want to take down some nice profits. Even if you bought earlier part of the day or even midday, as it's breaking down over this massive downtrend line right there. And then even if you didn't short, fine, at least you took down those profits. You protected your profits. How many times did I use that word? towards the end when I started to see this thing. I didn't know whether it was going to just suddenly turn here. I thought it was going to go close to it, but then everybody thought it was going to get exactly there. And when everybody's looking at the same thing, it doesn't happen. The algos know that everyone's got like a couple of sell limits right there, especially futures traders. So they decide to turn the market slightly before that. This one candle, when it started developing, it wasn't like one big red candle. It started to develop. I started to see it here, and I initiated the shorts at this level. So just get with it, guys, all right? Yeah, smart people. You all finished high school. You have advanced degrees from college. Maybe some of you don't. Doesn't matter. College doesn't teach you how to really survive in life. But making these charts so simple so that you can act on it, and then so many people still have a bag full of excuses, one after another, one after another, one after another. So I just don't ask anybody anything anymore. Let them live in their misery, and the people who are doing what they need to do are are making some money, or making a very decent some money. So that's just the way it goes. So at this point, the one of the most important things is that these particular charts that I'm showing, specifically this one, undoubtedly is the one that all of you can zone in, and I'll be using this chart specifically all through the week. Now I construct charts based on what is happening and what the previous reference point is, like how high did it go, how low did it go. So at this point, you can clearly see here that we have a very wide trading band, right? Which is roughly 100 points, right? 25.59, 26.57. So you're looking at roughly 700 points, right? 25.60, 26.72 on the high. Yeah, so like 700 plus points. So that's quite a bit. So the point is that this is the only chart that you really need. I'm trying to make it simple for you guys, all right? The only chart that you need. You need to just focus on the levels. Each of these lines are drawn to perfection. Where the markets turn, they were not just drawn randomly. I didn't just say that, oh, I'm just going to draw a line there. This is a gap fill. Features are actually moving up right now. They're up quarter of a point. If my hunch is correct, oh, there's another major risk, which is the political risk. There's a lot of stuff going on with the Mueller investigation, the raiding of Donald Trump's personal lawyer's office, Michael Cohen, who I personally think Donald should have fired a long time ago because the guy is a bona fide idiot and what we call in New York a schmuck. Okay? Donald needs really good lawyers, respectable guys, not Michael Cohen type of guys, in my opinion. He should have been fired a long time ago. Because what he's doing, he's putting the United States presidency at not at risk, but he's putting Donald Trump in harm's way because of his big mouth talk and everything. Okay? This Michael Cohen, I think he needs to go. That's my opinion. He should be the fall guy. This was a serious raid. These type of raids don't happen unless some major judges sign off or whatever. And whether one likes it or not, this is just the way it works. I don't think that's a major thing. I don't think the president's going to get impeached. Nothing like that. I don't believe in that crap. It's not going to happen. Okay? Whether you like Donald Trump or not. I think he's doing a terrific job overall. And with this risk about Syria, we're going to bomb the crap out of the Syrian Air Force. If the Russians want to go into a big-time firefight with us, well, our brave armed forces and our 6 fleets and our 7 fleets and our cruise missiles will take them out in a second. Because Putin is completely going bonkers because we expelled part of the diplomats, and he's the one facilitating what's happening in Syria. The Syrian guy is a complete animal. Assad and Putin and his cronies and Iran. Isn't that nice? The Iranian mullahs and Putin all in bed together are propping him up real nice. Keep it there, baby. The U.S. is not going to do anything. Don't worry about it. Go ahead. Just go obliterate, your people. No problem. I don't particularly care. You want to kill your own people, do it. Seriously, it sounds harsh, but hey, it's not my business. But from a regional standpoint, Putin and Assad are facilitating the Iranian terrorist groups to infiltrate that part of the world. Wow, futures are really going here. Right now, as we speak, up 4. That's because Xi is speaking. And maybe Michael Cohen has been sent to Gitmo. The guy is a bona fide idiot, putting our president in harm's way. Trust me, I'm a New Yorker. I know this stuff much better than all of you. So bottom line is that's nice. See that? So just looking at this, I'm glad this candle's developing here. We have some hedges on the SPY puts, longs on individual stocks, profits, very decent profits taken down. But this is a good sign. Now, the reason why I'm happy it's happening, because you can clearly see, because when I talk to you guys about these charts and everything like that, I'm explaining to you when it's static, not while it's live, right, during the day. So you can actually see the movement. Now it's live. And don't be surprised if it just, goes like this, hits this downtrend line, which I've shown many times before, then pulls back a little bit, or even closes this gap, or breaks out, hits this uptrend line, and then hits this, major resistance. So the reason, like I was saying, because this is live and it's moving, you can clearly see that it's not that hard to trade these candles. So here's a simple word of suggestion, solid suggestion, because I don't advise, right? You want advice, ask your partner, your wife, your husband, whoever it is, your dog. Like, ask them for advice. Don't ask me for advice. I give constructive suggestions on high probability trades, long and short. That's all I do. So bottom line is that you can trade, you just start focusing on the candles. Forget about anything else. I've already done all the structuring for you. If the candles are becoming, multiple candles are becoming red, generally after the second or third candle, there's a high probability. And if those candles are hitting a certain level, right? Like this line, for example, you have a good shot of sticking with that short. Now, here's another word of solid suggestion. Don't go heavy into anything, because if you do, markets have a tendency to suddenly turn. So if you went really heavy, let's say down here, and then the markets are turning, you are going to be in trouble. These type of drops that we are seeing, okay, even though I did say volatility is for forever to stay, which is a fact, but 700 points down, 400 points up, 300 points midday, this is completely abnormal. Just so you guys know that, okay? Even though the machines have completely taken over, do not expect 700,000 point type of drops and pull-ups. That's abnormal. In my opinion, and this is a piece of good news, for all of you who hate volatility, I don't like volatility personally, but I trade it, is that volatility will subside, in my opinion, because this type of unbelievable movements that you're seeing, and this is since the 3rd, right? 3rd of April, is not, what's the word I'm looking for? Is not that something can be maintained. Okay, how about that? You can have choppy volatility, but not this type of stuff. But even while it's going through, many of you who are trading it, making a few coins, making a few dollars, may I just say one thing? You are trading some of the most difficult markets ever known. So if you're trading and making money in some of the most difficult markets ever known, it's a fact. I didn't say that. Okay? It's coming from people like Bogle, Vanguard founder, coming from hedge fund guys like Ray Dalio, Guys who are worth billions and billions of dollars. And they don't even know what to make of this market. And we're still making some decent money of this market. So here's the good news, that if you can even trade this market or stay engaged, even if it's small amounts of money, this will be the most valuable trading experience you will ever have in your life. So for whatever it's worth, people say, oh, I really want to learn. I really want to learn the business. Well, this is the ultimate training ground. Learn now, and forever you shall prosper. Seriously. And with the help of these type of absolute precision tactical charts, features are up for, you are at least getting a guided roadmap how you can do it. Otherwise, you guys would be left with something like this to trade, and you wouldn't know what the heck's going on. Which even after this chart, I hear from some people, I don't know what the heck's going on. I'm like, oh, I give up. Well, I do give up. On some people, I just give up because they shouldn't be traders. I didn't mean in a bad way. Some people are just not meant to trade. Not everyone's going to be a super trader. For that, you need to listen to Dr. Steenbarger's video, which I'll repost again. There are three major elements which go into play to really be immersed in that zone where you start to see things before they happen. Some of you are probably there. I'd like to believe I'm in that zone. Can I react to things fast enough sometimes? Most of the times I do. Sometimes I can't. So, why isn't this coming up? It's really annoying. So I got an empty chart. So if I just left it like this, you honestly believe you guys would be able to trade this market? I don't think so. I don't think so whatsoever. I know so. So I structure it. And when I structure it, it looks like this. Instead of looking like, oops, sorry. What was the other chart? Instead of looking like this, it looks like this. This, the emperor without any clothes. And an emperor with the finest attire looking at you, and you know exactly what to do. So, saying all that, couple of positives here. This is a daily chart of the market, overall market. As I said earlier on, the daily candles cut out all the 15-minute, 1 hour noises and all that stuff. So here we were very nicely green, as if you look back at my charts from the afternoon, earlier in the day. And then this is what happened at the end of the day. This is actually what's happening now. But we did an inverted hammer, which is not necessarily good, but it's not an inverted hammer where it's all blood red and it's a long tail. It's a short tail, even though it's 400 points, it's a short tail, and the body is still green as we speak. You know where markets can go. If we really fall, we're going to hit the first level here, 25.85. If things really go berserk, then we can go to the bottom end of the scale, which is 25.52. And then obviously this big fat line in the sand, which is 25.28 on the E-minis, which is roughly around 25.30, 25.32 in the S&P 500. We make 25.32 on the S&P 500. You can short at will for a long time. Well, I shouldn't say that. Every time I say stupid things like that, the market goes the other way. But that's a very critical level. 2,500. How about that? 2,500, 2,530. We break 2,530, something really bad is going down. I don't think we're ready for that yet. So let me ask you a question like I asked my good friend Dano, because he does private one-on-one sessions with me and he's really picking up things very fast. When you look at this, and I just want an answer. I don't need explanations. Believe me, I have enough explanations in my head, okay? I don't need to hear a long-winded answer. But one of you step up. When you look at this chart, forget the lines or anything. The first glance, in 1 second, when your eye looks at it, What shape does it look like it is? What shape, meaning what alphabet does it look like? This whole picture. I'm sorry, what?
A W.
There you go. So Nick just called it. It looks like a W. Don't have to think about it. So, like, great psychologists, thanks, Nick. So great psychologists would like to say, and she's dead right, Miss Nick Simo, nice hearing your voice, Nick. So, is the fact that what do you call the is the fact that whatever Blink, Malcolm Gladwell's book Blink, and who's the other one, Kahneman, who said thinking fast, thinking slow. These guys are not stupid people. They're fine Americans who really know what they're talking about. But in simple terms, forget about all these great people, is what your brain says to you in the first 2 seconds, what's going to happen. So this is a swing chart, and as Nick correctly pointed out, it's a W. Now, if some of you didn't see that, okay, then I suggest you start working with Nick, all right? Because it is a W. It's a W. And that W, one way or the other, is going to resolve itself here and complete the first edge of the pattern, right? And I've been talking about this. Now I'm giving you the bullish version first. It's a W. And all this volatility, the world's falling apart. Oh my God, Stormy Daniels. Marcus got stormy today, right? Donald should, he should really have been careful when he messed around with these women. Because I know this is one part I don't understand. I just got to go on this. I really scratch my head. Look, it's pretty obvious. We know this in New York, okay? He had multiple affairs, even when he was married. It's old news. Nothing new on that. And honestly, that's his personal business. So why don't they try to be a little bit more discreet? Why do they have to be in public where people can see them together? I just don't understand that. I think that's the height of stupidity. You want to have an affair while you're married to a woman who had your child, then, and I'm not a cheating guy, okay? Never cheated, like, been married 20 years now and got, you just don't do those things because it messes things up. If someone wants to cheat, it's fine, okay? Good for you, do it. So the point is, if Donald's doing all this stuff, he knows it's going to come out. He can't keep on paying hush money to people. And there have been people who have been paid to shut up. It's really stupid. Have a secret affair, do it behind closed doors. This stuff will be dug out. And it's no good. Even though it has no bearing on the fact that, what he's doing. Guys, get it? I'm sure some of you in here have cheated. Just kidding. I'm sure. Maybe not. All right. Okay. That's such a wrong thing to say on my part. Just kidding, guys. All right. Not worth cheating. It's too much of a hassle. Come on, man. All right. So saying all that, it's a W. So if it's a W, then let's do a baby version of that W. It is going to basically come here, which is roughly around 2,800, right? And the technicals match it. Now, on the way to 2,800, which is a long way, which is 200 points from here, that's roughly 1,400 Dow points. On the way there, it's going to take a scenic route, which it has been. And that scenic route, as I like to call it, can be this, all the way down here, retested, like, boom, lots of volatility. Nothing goes up in a straight line, right? Even this one didn't go up in a straight line. It went like this, and at the end of the day, down, whoa, world's falling apart, boom, the next day. So I keep on trying to read the tea leaves as technically as possible, using multiple platforms that I use, and give you signals like I did on Friday, where I said this, keep a small hedge just in case we open lower, but stay long. And it happened. So what's obvious in prices is not obvious on the chart. I mean, what's not obvious on the prices, when you look at the price, oh my God, it's down $4. Oh, what's going to happen? So what? Facebook was down $3 and it went up $11 in 2 days. So you just watching prices. You just made the most idiotic move in your life by not making money off that. So the same thing with markets. Um, Even when they're going higher and it looks like, wow, that was a big rally. Well, during that big rally, there was a lot of chop, a lot of volatility. Went up, went down, next day came down. This one was like a big up and then all the way down, up here. And then by the time you thought it was good enough to go, which is the wrongest thing ever to think, you got a 3 day pullback. Oh my God, the market's gone now, finished. You listen to the guys on TV. Oh, what happened? I love the reporters. They sound so surprised. Oh, what happened? I'm like, oh God. The only reason I've seen BC on because it's breaking news, and they do bring some terrific people that I'm learning all the time. Bloomberg is the same way, but I love the reactions of the reporters. You see the reporter, like the girl, what's her name, Kelly? She's like, "Oh my God, what happened?" It's like, oh, it's like a comedy show. Like, great, yeah, nothing happened. All right. So then this thing happens, and then this happens, whatever the case. So that's what I'm saying. 2,500. You just gotta first look at the bigger picture, then trade. Like I said, think long term, trade short term. All right, because thinking long term and trading long term is not going to help you with anything. Trust me, you're not going to make money. You gotta think long term with some of those biotech type of stocks and all that. Think short term with the fast moving stocks. Nobody knows what the heck Tesla is going to be 6 months from now. Trust me, I don't even know. Okay, but I can tell you what's going to happen in the next couple of days, and that was one of the biggest winners. Huge, huge, beyond huge. Futures are up 7.5 right now. Mr. Premier G must be talking like a proper thing. Don't expect this is a China needs us a lot. We need them too. All right, trust me, because Kansas ain't making all the goods that we're looking for. So, bottom line is that. Um, so that's it. So that's your daily chart. Now, to zoom in for the trading stuff, trade off this. Look where we are. Trade off this chart. It's all you need, guys. Try to keep it simple. Each candle is delivering some dollars to you. Don't overthink. Focus on candles. More you look at these type of things, the more they talk to you. That's serious. It's not hard. Nobody taught me candle dynamics, how they move this and that. I self-taught myself over the years. These patterns, you can look at the patterns on a certain way, but they are really high volatility patterns which cannot be, like, if you look at the overall picture here, I can tell you, like, in between, yeah, we can talk about an inverse head and shoulder, this and that. But if you look at this whole pattern, can you name what it is? I can't. I know it's a pattern that drives retail traders nuts. Great. Makes us some decent money here and there. So like I was saying, the more and more retail traders fall out, better off the markets are going to do. Better off we're going to do at Clueless Trading, because we are tactical traders. I don't just make that term up. I personally don't care if the market goes down 3,000 points or up 3,000 points. What I do care is, do I have the overall directional bias correct? And that is the most difficult part of my job. But as much as I can, I let you guys know what my thought process is. Now, another suggestion that I want to make to all of you is, first of all, trade with limited amounts of money. I don't care whether the account's a $2,000 account, whether it's a $20,000 account, or it's a $200,000 account. You got to have a lot of cash on the side. You always have to dollar cost average. And secondly, because of the volatility, don't carry oversized positions overnight. Because waking up, we could wake up tomorrow morning, and I wake up at like 4:30 in the morning, 5, and like first thing is iPhone 8 Plus. No Samsungs, guys, right? Remember, you dump your Samsung, you get an iPhone, right? Okay, I'm going to keep saying that till you guys all finally do that. And I'm not going to ask each of you whether you use a Samsung. If you do, I might just have to fire you. So, saying all that is the fact that you could. I open my eyes at 4:45, like what it is. Just quickly look at it, and futures are down 30. Believe me, I don't believe anything anymore. So being a highly super, so futures are now up three and a half right now. They were up 7.5, right? And as you can clearly see from my charts, now that it's live, it hit exactly the downtrend line. Now, isn't that magic? Did I draw this after the fact? No, this was drawn. So what the thing that I want all of you to understand, and I think it's finally seeping into a lot of you, that technicals precede fundamentals. Okay? Technicals dictate what fundamentals give you a reason. Fundamentals give you a reason to do things. Technicals tell you what is going to happen on the prices. Now, there's a lot of people out there who's like, oh, technicals all like voodoo, it's like black magic, and it's all like voodoo thing. No, it's not. Look what happened. Look what's going on. Futures around 3. Now they're going to fall, and they're going to come down here again on this breakout line. Remember, this was a big breakout line. This is where we broke out. So that's why technicals are so important. So the other thing I'll tell you is don't carry large overnight positions for now. Play the earnings. Just give me some good suggestions. Play the earnings selectively. I don't care whether you buy one contract. In fact, I don't want people to buy more than 1 or 2 contracts. We'll do straddles on a bunch of them, and there will be some big winners in earnings, I'll tell you. But it'll be very selective. We'll hit some, we'll miss some. But generally, and I've calculated all my earnings plays over the years, I have almost a 70% hit ratio on my earnings calls because I selectively pick the ones. It's not just randomly go to the earnings chart and say, okay, I'll do the first 5. No. I either know the companies, either I played them before, I know what the reaction is going to be after hours. And with earnings, you want to buy like small, and some of them will be huge winners, like every other earnings play. So Amazon could be up $200, like last time, or more. Booking.com, that we haven't even traded that lately, could be up 500. No, not 500. That's a little bit crazy. I'm going crazy here. Could be up $200 or 150. Generally, rule of the thumb is for big cap stocks, they are not normally up more than 6 to 8% on a huge earnings beat. I think Google's going to do really well. I think Netflix, is going to go to $320 easy. Apple, I have no idea. Well, if you guys all dump your Samsung, Apple could actually go to $230. So it's your patriotic duty to just dump your Samsungs and buy an iPhone. And I'm dead serious. You start thinking about it. So Apple, I don't have any idea. Tesla, it's always a toss-up. We traded it very efficiently, but it's a toss-up. So we do straddles. So do earnings. Don't carry overnight risk too big because you just don't know what the heck's going to happen. Trade intraday volatility because it gives us a huge chance to make money. What else? Yeah, I think those are the simple piece of suggestion I can give you. Now, the other thing that I want to tell you guys all, that you're listening patiently, I'm going to wrap this up so you don't get too bored, is people ask me, so where do you think the stock's going to go? Look, 90% of the time when I say the stock's going to go somewhere, it goes there. But what's happening right now is that the stock's in a range. So when I'm saying it's going to go there, like I said, Google was going to go to 1040, 1050. What the heck did Google go? Google went to 1044 from Friday. It was 1009. It went to 1044. So things are happening very, very quickly. So you have to be in the moment. Now, if you think that Google was going to go from 1044 to this is Win, for example. These are decent charts. These are nice. I don't want to deviate. I'll go to Google in a second. These are nice, solid swing charts. This is a daily chart. It's pretty clear to me it's going to go back to 189, 190. Everything is intact. I don't care if it's down $2 one day, $3 one day. This is a nice formation which will, like I said, it was up 6 the other day before the market pulled back. Bank of America moves a lot. This is a great lotto play. You don't have to put too much money in. You get 30, 40%. You get 200%. when it really starts moving, and when the market sells off, Bank of America is also completely run by robots, believe it or not. Even though they're all lottos, the calls. Look what happens. It hit there, boom, it went. So if you're up and something, just click it. Quickly look at my chart and click it. This is a beautiful chart, with or without mascara. Okay, how about that? It's a good looking chart for patient holders because this stock is doing this same thing that it did. After I called it, it went ballistic after earnings. Then it pulled back, and now it's going to do this. Patience. You just buy something 2 months out. Everything's fine here on the internals on the MACD. So what? Someday it's going to have a little green, a red candle. So does that mean that you know it gets this little red candle? Big deal, and that's worth $2, $3, $4. So just by looking at prices on stocks like Ulta, Chipotle, Wynn, things like that, it's not going to get you anywhere if you are a patient swing trader on these things. Sometimes I just feel like putting a bunch of money in these type of stocks and not just bother about trading anything all day. Maybe one day I'll do that. But then you guys are going to be so bored out of your mind, Seriously. Because these are literally no headache stocks because you don't need to look at them every single day as long as the charts cooperate, which is certainly cooperating. So what was I going to show you? Google. Alibaba's been acting really strange, and after the initial move up, and it was really moving up nicely, it also has a lot of upside. I think what's happening with Baba, aside from the China trade tariff war, and a lot of Chinese stocks got hit, I think some really some of the big money is setting it up for a big move after earnings. That's my opinion, because there's so much upside left from 160s to 200, all the way up here. But intraday, you can trade it for a range of roughly roughly 3 or 4 points. That's what it does. Or if it really moves up from here, it went from 166 up to 175. But again, there's really nothing wrong with this stock. It's actually at a very powerful low. Even if it slips a couple of bucks, I personally think that this gap gets filled, and that's a lot. That's 20 points. And it most of the time, these things will happen. Let's say some good news comes out between the China-U.S. Trade relations. These things will just fly, like really fly. Now, one of the reasons also because a lot of these stocks have come down so much because they are involved in ETFs, exchange traded funds. So those exchange traded funds get blasted during heavy volatility. So they sell those ETFs, and the stocks in them get sold automatically. You guys understand that part, right? So the ETF, the effect of exchange traded funds, there are tons of them in the market, have a disadvantageous effect on individual stocks for no fault of theirs, other than the fact that they were part of that exchange traded fund. Does everyone understand that part? Yes?
Yes, Frank.
Yeah, just like in a basket. So you sell the basket, so you're selling the individual stocks with it. To me, you have to look for an opportunity on that. What was I going to show you? Okay, let me just quickly wrap up. So here is what's going on with the overall picture. Overall closing in the market was really crappy. Okay, when you lose, and I put all this down in plain English. All right, so let's look at this thing here. This was all beautifully green over this line here, which is the 150-day moving average, right? And then you started to have a small tail. Okay, fine. It was still very fat green. And then you start to see it turn. And I said, the minute it loses it, there's going to be a lot of sell programs. I'm sure you guys saw that. No, that's exactly what happened. That's exactly what happened. This chart, when you look at it on the daily, okay, even though it looks like kind of a W, it is still saying that the possibility of retesting this level here, this climactic oh my God, the roof just fell over my head type of thing, which I think would be hugely profitable to us from a short basis. But you can't do the short till it starts to happen. You do that short right now, they'll blast you out. I think is a very high probability. And you need to buy that very heavily. Now, if somebody's waiting around for it, they'll be waiting around forever because we don't know if it's going to happen. This beautiful candle, which is this ugly candle, which was an inverted hammer, right, can very well tomorrow look like this. This was a doji inverted hammer, look like this. So the key thing to keep in mind on this chart, which I'll be showing every day, is the market for a more positive health report needs to stay above the 150-day moving average, which is not static. Tomorrow it will be adjusted, right? Because it's 150 days. So tomorrow will be 150 days plus one, right? So bottom line is that we need to stay above the 150-day moving average. I have very seldom, well, not seldom. Let me see how many days we were below the 50-day moving average. That's your 50-day moving average, curving down. That's certainly telling you there's a lot of pressure on the market. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days. The market stayed back in February below the 50-day moving average. Before it kissed it, went above, then came down, and then really went up. So how many days has it been now? 1, 2, 3, 4. This is real advanced math, by the way, guys. I hope all of you guys are following me, right? This is really advanced math. I'm just kidding. I'm just counting days. 1, below the 50-day moving average. 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Whoa! We're 15 days below the sorry, 15 days below the 50-day moving average. That's a lot, guys. So either we're going to snap back or we're going to come down and test this, which I think is a high probability trade. Keep the powder dry, and it's going to happen real fast. I'm going to be like, oh, we're coming down. It's just going to be boom. It's going to go. Maybe maybe that's going to happen on a political event. Let's say Donald really loses it, fires Mueller, okay, and there's a constitutional crisis, a mini one, okay. Immediately the market's going to fall 1,500 points, or we bomb, which we're going to bomb some Syrian Air Force installations and all that stuff, and then Russia downs a couple of our jets. I really hope they don't, okay, because we're going to just blast them out of the skies. Those MiG-25 and whatever Soyuz things that they fly, trust me, I think our pilots are seriously equipped to take them down. So if we get into a shooting war with Russia over Syria, because that's what they are, right? I hope you guys understand that. So that's going to cause some major global tension. And if Iran gets meddling in, tries to support Russian defenses, air defenses, by sending in Iran's very, very well-equipped country militarily, very powerful Air Force, Navy, and all that stuff, then the markets will fall 2,000 points. And those possibilities are there. I hope the Russians keep a cool head, drink a little less vodka, okay? A lot of my good friends are Russian, so I know what I'm talking about. I hope their pilots drink a lot of vodka so they can basically just crash their own planes, and don't get into a shooting war with us, because our military is not political. They'll blast those guys out of the skies if they go nuts trying to defend the Syrian regime. So this is a very serious geopolitical conflict that is we don't want. We don't want to get into war with anyone. So saying all that, that's it. So this is not a good close. This line here is the 200-day moving average, right? That's why I put this line here. It's 25.94. It looks very likely that's where we're going to go. So that's basically it, guys. Any quick questions I can answer, please? Because I go ahead.
But Frank, going back to the chart that you were showing before, I think
which
that might have been one
which
hour.
the one.
The SPX.
Yeah, this is E-minis, the futures chart. This one, there.
Uh,
Okay, you mean this?
yeah,
You mean this one?
yes.
Yeah.
When
Tell
I
me.
when I look at this, right,
Tell me.
my instant thing would be that it's gonna come down based on the left shoulder, the
Y-
head.
Okay.
So I'm thinking there would
Now, for the
go ahead.
shoulder, that's a very good point you brought up. So, for the shoulder, what I did was I constructed a very serious chart which shows all the right shoulders and the left shoulders, right?
Mm-hmm.
So, this is your
Right.
right shoulder. You can see here, these are multiple shoulders, right? And every time it hits those shoulders or close to it, they tend to retrace because we are still in a head and shoulders pattern, which is bearish. Okay.
Right.
So for the shoulders one, you should refer to this particular chart. So right
Mm-hmm.
there. But then at the same time, those are the shoulders. So what you can do, remember, it's never going to be an easy answer that we're just going to nicely walk by the right shoulder and say, "Oh, this is nice. It's a beautiful day out in Central Park," and just go straight up. We are going to hit those levels. We're going to zigzag around. Look, futures are up 9 right now. See what's going on?
Yay.
Okay, so yeah, it's good. And so basically, what you're looking at is more complex patterns. All I know is that you can trade these ranges, which are very large, and you can make some decent money on it. Now, how it reacts at the shoulders is of critical importance. If we can take out this right shoulder, we're going to move
Right.
very
Mm-hmm.
quickly towards 2700, because then the reason being that the shorts who basically consistently keep on shorting at the right shoulder, those machine programs which do it automatically like they did
Right.
today, they go into a major short covering mode. So that's why you go from the market being up 50 to 100, 150, and it's like moving rapidly. And people are thinking, "Oh wow, everything's changed." Nothing's really changed. What's really changed is that the machines who were short are now being forced to go long. So pattern wise, it's this in my opinion, this is the way I look at it. This is what's going on for now. That's now. If
Right.
it breaks
If
26,
it breaks the
see you later. You need to get in there fast. Little amount of money, large amount of money, I don't care. I don't know what. I wouldn't put a large amount of money because things are just, it could very well just go here. Remember, I drew a channel, right? I drew a channel. So when I draw a channel, it could very well do this. It goes into this channel, makes a fast move up to the right shoulder. There is definitively going to be sell programs here. That's a given. And here was the right shoulder. It came here. It stayed here for like a few minutes. Watch this. There was this sell candle here. You can see that this little red one. There was like indecision, whatever, like what to happen, and then it just took out the right shoulder. So if that happens here, kind of does this, pulls back a little bit, and it takes it out, the next level of resistance comes in here, but that's going to be a mild one. I think it's just going to break and go straight to 2680. So that's basically where we are right now. If you want to play, all I know is I'm trading the ranges right now because we don't know whether or not it's going to be up there, whether it's going to be down here. You just have to trade the ranges. Now, this particular chart that you're looking at, this is easier to see because I didn't put the right shoulders and the thing. It's a very clean chart. When you look at this chart, it doesn't necessarily mean it's going to go down. It can also mean this.
right breakout. Mm-hmm.
Okay, it can also mean this. And if futures are right now up 10, you can already see. So basically during the day, for example, you look at it, I'm saying, okay, these candles are starting to build, so buy here. You can always buy a bit and then see as they expand. And when you start to see the real expansion, that's when you see the prices are like moving really fast on your screen. So let's say you're busy and you look at it. So you say, okay, sell. Make some money because these candles, when they move in 15-minute increments. It's a 15-minute chart. So you can
Mm-hmm.
basically place a trade for an hour. That's 4 increments of 15 minutes, right? So you say, okay, you look at you're really busy, let's say, you look at your phone 20 minutes later, you're like, wow, look at that, boom. Right when you say wow, hit the sell button. And yeah, it'll probably go up a little bit after that. So what? You just made some easy money, you know? So this is the best way to play. Each candle is 15 minutes. So you can, let's say you have an hour, you can watch things a little bit, then you trade it for an hour. But the key is that when I see these reversal hammers like this, like these tails, a best time to get in is, obviously here it's difficult to get in because it just goes, hits and goes boom, right? It's just happening in 2 minutes. Best time to get in is pretty much when the second candle is developing, the third candle is developing. Futures are up 11 right now. Um, and he's breaking news. He's addressing the forum right now. It is showing it
I
on
knew they were going
Bloomberg.
to do that.
So yeah, so futures are up 11. So you can see here now we will most probably get up here, move back a little bit. This is exactly how it happens in the daytime too. Now it's really moving. Futures are up 13. See that? You guys are seeing live
Mm-hmm.
as Premier G is, that's him. That's the G effect. So right now, let's say it was a daytime, you move
Right.
from 2614 to 2632. We're up 14 right now. So basically 2614 when we started the session, or 2615 to, that's 15 points. That means the Dow Jones just went up 105 points. 7 times 15 is 105. Just as we are finishing off this session. There you go. You get it? So you could, this is the reality of what you can do during the day. And someday when you're really off, I mean off meaning like, you can really watch the screens and stuff, you can do this all day long. Not every trade is going to be a winner because sometimes, they'll play all kinds of funky games and do this type of stuff. But the chances of you scalping some real decent money for that day is pretty damn good. So that's, so does that answer your question?
Yes,
Now,
Frank. Mm-hmm.
okay. So I'm going to listen to Premier G. Maybe he's going to have a drink with me, Um, he's speaking right now. They're showing it. Um, and a lot of people. And it was serious stuff because, like I said, he's not going to, I don't think he's going to be as brash and crazy like our Donald likes to be at times because that's his style. This gentleman's style is different, but I do believe that their relationship is very strong.
Ooh.
They respect each other because one thing Donald likes are strong guys, right? And that's the reason why, he's in love with Putin because Putin's like Mr. like KGB mafia type, right? So he's like tough guy. So Donald's a New Yorker. They like tough guys. So he wants to, as long as he doesn't, I don't see him riding a bareback horse, with the, with the shirt off and stuff on top of a horse. I'm okay with him liking Putin, right? But if that picture ever shows up, that's it. It's over. But just kidding. So yeah, so Donald likes guys like she. He likes dictators. He likes the Saudi guy. The Saudi prince, the tough guy, the one who put all the billionaires in jail. So that's just his style. That's Donald's style. He likes really tough guys, and so we call them dictators, but it's okay. Countries need dictators sometimes. It's just the way it is. Democracy is not for everybody. You know what I'm saying? Anyone who has kids knows that. If you have too many kids voicing their own opinions and wanting to do crazy stuff all the time, you as a parent have to be a dictator, correct? I never had to do that with my son. He was always kind of like, you know, but you know what I'm saying. All right. We are up 17 and a half right now, ladies and gentlemen. I have to close this session. Thank you for attending. There's a great crowd. And like I said, just trade these charts. Don't believe anything what you see on prices. Just trade the charts. I think a couple of these tech companies are going to deliver huge earnings. We have bank earnings starting off with JP Morgan on Friday. Don't believe anything. Trust me. Just believe in the charts. That's all. And even in the charts, you know the levels we're trading in. So market's not going to go in a straight line up. They're not going to crash and burn in a straight line down. But they, just That's just the way as long as you accept these simple facts of life and trading, you're going to be okay. So have a great evening. Yes, Mike reminded me. Thank you, Mike. That Fed minutes on Wednesday. Fed minutes never hurt the market that much. Okay, the Fed's been pretty transparent. Jerome Powell, the Fed head, the Fed chairman, is a terrific gentleman, great appointee by Trump, and he's great. He talks straight. You know, Fed's not going to do anything crazy, and inflation's contained. We see that on the numbers that keep on coming out. The Feds is really not my worry that much. My worries are all the rest of the stuff, going on. But then we always worry. Any other quick questions? Anyone? But all I'm going to say from a trader perspective, remember one thing, and please listen to this carefully. There's something we call in the business, which you guys know, called analysis paralysis. Okay? And analysis paralysis in life and in trading can be a big, big fault and deficiency for us to make money in life and in trading. When we analyze too much, as I like to say, analyze too much, okay, we miss. Now, it doesn't mean you always have to shoot from the hip, shoot first and think later. Think, but act quicker. Think, but act quicker. This is a fast market. This is not a slow market. It will always be a fast market. Maybe it's not as fast as we're seeing right now. It's always going to be a fast market. So don't wait around like I like to, keep on motivating people, or like sometimes I get in their faces, like perfect moments. These are the perfect moments on long and shorts. Perfect moments on the long side. So that's basically it. Futures are up almost 20 right now. I know exactly what he's saying right now. I mentioned to you before, and I promise I didn't write his speech, is the fact that he's basically saying he's opening up China's economy, which is great for China. Which is great for China. My son was in China when he was 14 and a half, 15. He was teaching English and math in this rural school way out there in the mountains with two other kids. And in China, you can't use he had internet access, but you're not supposed to. And he was Facebooking, putting his pictures up, all these he lived in, this school had like 2,000 kids. Great experience, right? No running water at times, he had to run to the hills for what. So he used his internet access was restricted when he wanted to, get on his Facebook and stuff and posting pictures and Instagram. So it's very simple. What everyone does out there, right? When they have, when they can't get into Facebook and things like that, they use a VPN, a virtual private network. Everybody does that. So he was on Facebook like right away. All he had to do was get a card with a VPN access number. So these type of things China has to open up.
Give me 10 minutes, honey. I'll soon call you.
Yeah, call me in 10 minutes. Just kidding. All right, guys. Listen, I got to go. I think it was a great session. Right now, as you can see here, the power of the charts, we hit that level, which is that big breakout level. And guess what? Sell program came in. See? So that's how you trade in real time. You get close to that. You don't wait like, oh, it's definitely going to go higher. No, nothing's definite. It hits that level. Immediately a sell program came in. You can't make these things up. Look at that. We were up 19. Now we are up 17. Not a big deal. But if you got in late and you didn't sell off these levels, immediately you're in a position of loss. You know exactly what I'm talking about. So, all right, guys, have a great evening. God bless you all. And let's make it happen. It's earnings season. Let's hit some real big movers on the earnings side. I'll try to do my best to put out some great trades out there. Just do small amounts. Just do small amounts on the calls and stuff. And so at least you know what your risk is. But don't just sit there and watch these earnings, which I've seen so many people do. They're up like 20, 30, 40, 50, 60, 70, 80, 90, $100. And then you ask people, hey, did you do it? Like, no, what's your brain telling you? Next time? Well, the next time keeps on rolling on. So stop the madness. Just do a little bit. If the options are too expensive, then you can basically do a hedge, or you can basically, do some sort of straddle. You can sell some puts. You can buy some calls. You basically can cover your cost of buying that particular trade. But in most of the bank cases, the options are really cheap, and the most expensive options, as we know, are obviously on the Amazons, and the Netflix options are great, very reasonable. Those are the types you got to do. All right. Have a great evening. See you guys tomorrow. And so far, we're looking good. Good night, guys. God bless you all.
Thanks, Frank. Have a
And
good night.
take care, Nick.